Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, July 13th, 2026. It's 3:31 p.m. Eastern Time, so I'm starting the video. And this is video number two of the day. We're going to cover the short swing trade ideas. I'm just going to go over, I'll try to keep it limited to the ones that are still on the site listed as the official trades. If you didn't catch the previous video, watch at least the first part of the video. I explain the archiving and tagging system that I have from the use of categories such as, here, let me use another color, trade ideas, and then all the anything I cover from day one, from the inception of the site. I always tag or do my best. Once in a blue moon, I might forget to put this ticker tag of the symbol that I'm covering. So if I do a video with 2 dozen components of a sector, I'm going to put all the components that I covered in the charts, at least if I went into any bit of detail on the charts. And then you also have the categories such as long trade ideas, short trade ideas, completed trades, etc. All right. You can also, by the way, I didn't cover it in the other video. The categories are also market analysis, and you can break that down by asset classes, equity markets, gold, commodities, forex, crypto. And, when I do a video, I might cover several of these categories. So it's not unusual to see a single post with multiple categories and multiple tags. Okay. So again, I explained that in the other video, and it also, it's as I think about as good as an archiving system you can find. It helps you come in if you're new to the site, you want to, or you've been here forever and you want to kind of look at Apple and let's see how Apple's traded over the past at different points in history. You can see my track record on calls on Apple, analysis on Apple. You can go back, since the inception of the site back in the beginning of 2012, and all those posts are tagged. And I also speak to, which I'll do in this video as I update these short trades, some of the shortcomings or the reason there's not a simple performance page. I tried in vain when I started the site with a spreadsheet, a tracking form. But as I've stated in the previous video many times in the past, some of the trades are pretty straightforward, cut and dry. Enter here. Here's a single buy point, break out of a chart pattern. We go long at this price and we sell here. We have a single price target and a single stop loss. That's an easy trade. However, the vast majority of my trades list multiple price targets and, in many cases, alternative or multiple entry points. And then along the way, I will continue to highlight objective add-ons, re-entries if you took profits. And therefore, it's not, unfortunately, not all black and white. So again, the best way is to just kind of follow and you'll get the weekly updates. In this video, I'm going to cover a couple of these that have hit a suggested stop. There's a couple I looked at. I was going to update them today, get a post out to you, at least one or two. However, then I looked closely and I had multiple entry points. For example, when we get to IGV, the software ETF, we'll talk about that. All right, let's go through as I did last time. We're going to go through in order. I've sorted by symbol. When I do that, it goes alphabetically, but $ or any forward slash, which is denotes a futures contract, those will come first. And just like in the previous video, I use the same tagging system. Some people are looking for BTC. That's what they will, consider Bitcoin. I'll use the full term Bitcoin. Bitcoin futures or BRR, and then the Bitcoin ETF. We used to use GBTC up until the point the spot Bitcoin ETFs were approved a couple years ago. And so now you have, where is it? Somewhere in here should be IBIT. Alphabetical. Okay, maybe I didn't tag any with IBIT. I've really been focusing on the actual current trade at this point in time is strategy, MSTR. So we'll get to that in a second. So again, just want to let you know the redundancy. RUT is a Russell 2000, RTY or Russell 2000 futures, and IWM is the ETFs. It's all one and the same. Just depends on your poison. You can't trade an actual index. You either trade futures, the ETF that tracks it, or options on the index. Those are your three options there. All right, so we'll start out with Bitcoin, and since it's very much related, and again, the trade that I'm focusing on, and I personally own is, or I'm short, and the opposite of owning it, I guess, is Strategy MSTR. So we're going to start there since I have Bitcoin first. Okie doke. Let's go to the chart. This is the chart I've been sharing, focusing on. This is the spot Bitcoin crypto BTC. It's a 5-year chart with daily candlesticks. And just to the left here, the chart, you can see we had a divergent high and a sell signal there. It doesn't show clear, but there was an uptrend line that was broken, and that gave us that was the end of that bull market. A cyclical bull market started this secular bear market, or cyclical bear market. It was multi-year. You can see my year breaks. That was the end of late 2021, October. And then this was October 22. So that's a 1-year span right there. Remember, we're looking at a 5-year chart. Okay, so bullish falling wedge, divergent low, my kind of pattern, right? And then a breakout, buy signal, gave us a bull run. Up here, I started highlighting the negative divergences and multiple trendline breaks / sell signals. We had price targets on Bitcoin via the futures or the ETFs, whatever you're trading. And so recently I highlighted, we hit this 58,630-ish target right there, and we've been dancing on it. I've highlighted how we have positive, aka bullish divergence. I've also shared with you, if you've been following me for a while, you know I'm not a super rigid trader. Some traders have a trading plan that they will never modify, they will never stick with. I will look at a chart, and sometimes I see what appears to be a potential bullish setup or a potential bearish setup, and I may pass on it if I think that the, let's say in this case, the positive divergences may fail and be taken out. And I did point out, and I'll continue to maintain, Bitcoin is an objective long at that downside target, which was hit, the 58,630-ish level. You could go with IBIT if you want to use an ETF. There's a lot of spot ETFs out there. IBIT is the most liquid. And so you still have this positive divergence, which could be the catalyst for the next leg up. However, I think there's a good chance that we're at the point, and it's and this is where, there is some subjectiveness that comes into, a call like this analysis. Why aren't I long? Is that support, positive divergence, my kind of chart? And remember, there was a bounce to be played, and I did game it. It was a little, I expect a little initial pop there, and we got it. But the big overriding factor here is the theme that I've talked about, the tail wagging the dog. And that is Strategy, which, Strategy used to be a tech company. It morphed into a Bitcoin treasury fund, is, the largest of them. There's quite a few out there, but it's the largest one. Some are blowing up, and they use a leverage model. And then Saylor, the CEO, tried to decide, let's do some funky enhanced preferred dividend yielding thing. It's, again, I use the term Ponzi scheme. It's not a literal Ponzi scheme, but it's the same kind of concept where it works fine as long as you have a lot of money coming in, a lot of inflows to support the financial engineering they have going on there. But at the core, just Strategy alone buys Bitcoin on leverage. And then that whole preferred share they have, which relies on new monies coming in, that's already flashing some warning signs being priced. Last I checked, I don't know where it's at now. I think it was selling at about 75, 80, below 80 cents on the dollar, which is a red flag. The markets are pretty efficient on sniffing out issues. And again, so the point was Bitcoin, for those of you not familiar, Saylor's motto was never sell, iron fist. And then what did he do? He started selling recently. And that was always kind of predicted by myself and others to kind of be the kiss of death. And we'll see. Who knows? He's trying to justify the reason for it. And it has to do with those funky preferred shares that they're issuing now is what they're claiming. But either way, that has dealt a psychological blow. I see it in the headlines. And so therefore, if that unwind continues, I'm going to get to Strategy in a second. Remember, we have Bitcoin at support, but Strategy is below support. And I still have long-term targets, which very much hinge on the unwinding of the whole Bitcoin trade. So we're not at that all-in moment. I've had a couple subscribers that have asked me, hey, is it time to load up or go with that MSTZ, which is here, let me get to the cryptos. This is strategy right here, MSTR. And then I did an in-depth video. If you didn't catch it, you might want to. You can pull it by looking at type. When you watch this video, remember my tagging system at the bottom, you're going to see, because I'm covering it, I just have to make a note to tag it with MSTZ. It's the 2-time leveraged inverse strategy ETF, so meaning bearish. So it has 200% leverage. It attempts to get, if strategy drops, it attempts to do twice that. I'm not going to get into the weeds right now explaining the fact or how the decay works, the decay, I should say, on leverage ETFs. Basically, it 90% of the time it's working against you if you hold a leverage ETF for anything more than a short term. Really, they're engineered initially to be day trading vehicles out by the close. And however, I've shown the math, how it works, and I've even showed real world examples, because I always say sometimes people show you something in theory or concept, why something should do this or that. But again, check out the FAQ page on right side of the chart. It's located under resources. Then go to FAQ, and here, let me show you where to get that. And I like to do this because I think everybody should know these things. You know, how that decay works. You probably heard about it. Frequently asked questions right there. And then you have these subcategories right here. Click on this one, ETF related questions number 4. And then right down here, the second from the bottom, is there a disadvantage for holding ETF or ETP that's leveraged for an extended period of time? And it's all right here. It's about the math, how it works. It's not rocket science. And then you'll understand it's pretty much, you don't want to hold it when there's a lot of back and forth day. Even if you get to call right long term, let's say a year-long trend, but it's a sloppy trend with a lot of corrections in between and a lot of days that close against your position, that's where the decay will eat at. And you still might outperform the underlying if you get the trend right, but you're probably not going to outperform by 200% as you might think. However, if you get what I call a unidirectional rip, and again, you can reference the video, it was a couple months back. So when you get to the MSTZ ticker, there are 3 of them out there, and I compared them all. And I looked at liquidity, which you always want to go for, especially in a relatively illiquid ETF. You know, these don't have as much liquidity as the actual strategy shares. But so I looked at expense ratios, and then most importantly, performance. And in that video, I measured the performance I picked certain inflection points, you know, tops and bottoms, and showed you that this guy consistently outperformed. However, I also went on to say that there is a time to use either the inverse short or long ETFs, and a time not to. And basically, when you see a lot of green or mostly unidirectional rip, meaning very few counter trend days against the trend, that's when it'll outperform. So I just wanted to get that out to you. And as I've been stating recently, when asked, yeah, we're not there yet because we've been in this little grind. If what I'm looking for, and you know, I'm spending a little bit more time on this trade than I'm going to on the rest, because I think there's a lot of potential if I'm correct. A lot of ifs there, and that's what stops are for. If not, remember on this trade, I mean, we've played Bitcoin like a grand piano, not just in the last year. If you go back in time, before any of the spot ETFs came out, before strategy was even a big thing, we were trading GBTC and Bitcoin futures long and short, and with I would say, would probably be considered on Wall Street an extremely high success rate. You know, it's like my usual swing trades, hit and run. I'm not always in it. There are times where I step back, but all the trades are hard to see now because they're all squished together, long, short, long, short, long, short. So, but now these spot ETFs are the better way to go if you don't trade futures. I'm a futures trader. I like futures, but I also see the potential unwind of strategy And so let's get back to that. Let's talk strategy. So what I'm noting on strategy is, so you can see here, we had a short right off the highs, hit my first two targets, and then we had a third target, but right here we covered all shorts long, all shorts on the site. That was all in moment, April 7th, cover all shorts, go long, full long. We reshorted it again. I gave you a total of 1, 2, 3 targets, perfect tag at the bottom of my third target zone. We reversed it there. We went long. I gave you 1, 2, 3 targets, but decided to cancel T2 and 3 when the top of T1 was hit. And good thing we did, because it gave back about 2/3 of its profit on that initial drop. Waited patiently, reshorted again, made a revision to the suggested stop I gave you, so they couldn't clip us out. Sticking with this one, and that'll be a common theme as I go through some of these trades. And then I highlighted a new objective short entry if you weren't already in it, or an add-on on a break of the bearish rising wedge, and then that secondary trend line. And so far, what I want to point out, so we took out support. So here's strategy below that long-term support, which is right about 102.19. You can see there on the chart. Very, very well defined, which is something. It's clinging on to its positive divergences by the skin of its teeth. What it means, if it punches down and makes a new low and goes to hit my second target, will most likely have burned through and taken out these divergences. And that in itself will be bearish. Now, you do want to see Bitcoin do the same. Bitcoin, remember, this is IBIT, kind of one of the newer, remember, all these spot Bitcoin ETFs came to market in the beginning of January 24 right here. And so before that, you really have to look at GBTC. And you can see it still has positive divergence. So guys, it wouldn't shock me in the least if the strategy / Bitcoin trade doesn't play out. In fact, if we go the other way, if they can come in and buy it, it's simple. If they, if Bitcoin can rally, that will be the saving grace for strategy. Remember that they not only do they rely on, or does it help to have inflows coming in, but also they have a huge amount of Bitcoin that they hold, and so then their values swell, and it's a vicious cycle trade. So that's where we stand there. So this is a case of, and you can call it confirmation bias, you can call it recency bias, whatever kind of bias you want, where I'm not being dismissive. I'm recognizing the nice big positive divergence. That's typically what I look for to go long divergent lows. Not just the divergence, but sell signals such as trendline breaks, like we had right here, primary trendline break there, other things like that. And we did have a breakout recently right there. So there is that. And but if this breakout should fail, that would be typical, much more typical of a bear market action. Like I often say, a bear market is just like a bull market in reverse, except it moves faster. And that's one reason I love shorting stocks as much as I love going long, because stocks tend to fall a lot faster than they rise. So in a bear market, you can make, here's an example where Bitcoin fell from this point to this point. I'm just going to measure it out percentage wise, and then I'll tell you the number of days. 35% in, what is that? Looks like just a couple weeks to not even 3 weeks. Rarely is it going to go up that much that fast. So stocks, again, they tend to fall faster than they rise. That's just how it works, securities in general. And all right, let's not spend too much more time on it. But the key takeaway is it's, not an all-in or aggressive moment, not a great time to be in the leverage ETFs, because we've been slogging sideways, just like the stock market has been slogging sideways up near its highs, all-time and multi-year highs. Bitcoin's at a multi-year low, not an all-time, but a multi-year low. And I think they're most likely going to break in the same direction, because Bitcoin tends to be a risk-on asset. Kind of disconnected a bit from the market here. I think that's clear to see right there with the stock market not far off all-time highs. And so, if the markets break to new highs and it's anything but a failed breakout, like I suspect it would be if we happen to in the stock market, then yeah, you could see the risk on trade money come back into Bitcoin. So it's a take it light, not all in moment, in my opinion. But if we start to move down and take out the recent lows, I do think we can get some waterfall selling. And then just to recap, again, all these posts you can reference clicking on the ticker tag, especially if you go in through the active trades category and do it that way. What I mean by that, if you go in for the active trades category on the site, let's go back there, trade ideas, active trade short, and then you click on MSTR. Where did it go? Let me put them sort by symbol. That's going to then just reference updates, particularly on MSTR on that trade, right? Whereas if you click on the ticker tag, it's going to load all coverage of strategy, including videos and weekly summaries in which it was covered along with other things in there. Okay, so to recap, and then we'll move on. This is the first target. It was already hit. This is T234, and I still have, you got to go, yeah, T4. I added that in the May 6th video. And it, part of my logic, but not all of it, a lot goes into the, analysis of the charts and where the price targets are, is that if we get down to T3, you're probably going to be in that complete unwind, basically a vicious cycle of selling where strategy selling then begets more selling, being that, again, their whole strategy is based on a leveraged model. And if any of you have dealt in the financial markets and you understand what happened in when the dot-com bubble burst in March of 2000, every bull market I've covered the many times over, the FINRA, which used to be NYSE, it's now FINRA margin debt, always peaks and tends to go kind of almost parabolic at the end of every bull market. More and more folks buying on leverage. And then that's why bear markets are so painful to those that don't understand them and how they work, and they can't fathom and grasp why stocks continue to fall when just months earlier analysts have been raising estimates and calling for much higher highs in the stock market. Again, it's a vicious cycle. Stocks will go first, then the news headlines will slowly start to follow, and then again, you get a vicious cycle where selling leads to more selling because people's portfolios are depressed, and you might have iron fist, but guess what? Who doesn't? Your broker. And your broker has the final say when they issue that margin call notice. It's not, this isn't the mid 90s anymore when I became a stockbroker out of college, and I could pick up the phone and call a customer and they had a week or so to get the money in. It was no big deal. It was T+5 or even it was T+5, I think back then. Might have been T+7, meaning trade date +5 business days, that is, to get the money in. Send me a check if you bought a stock. Now it's everything's quicker. And so what I'm getting at is the most brokers now will blow you out end of day if you have a margin deficit. So unless you wire them the money right away. And that's why things can move and will move a lot faster once we get to that point of what I call point of recognition. So that's part of it here. If we get down to T3, technically we're going to have taken out the divergences, and we'll probably be in that vicious cycle where selling then begets more selling and can take us down there. And I have to state that again because I know that's a very aggressive target. I think if our last short entry after we bounced it, I think we shorted that same level. And then I also give you a short here. So our average entry price is about right there. If hit, T4 is going to be about a 90% drop in strategy, which would be, of course, especially if it happens pretty much unidirectional meltdown, which is usually what you get at the tail end once you hit that, what I call point of recognition, where most of the Bitcoin bulls realize, something else is going on. I keep buying the dip, and it's not working anymore. And then you get that capitulation type move. And that's when a 90% drop in strategy, or the tail end of it at least, will most likely result in probably well north of a 200% return in MSTZ. But guys, again, it's all conditional. We can break out here. We still have the downtrend line right there, which strategy keeps getting rejected at. I can pop that trend line, then you have some resistance levels. I'll continue to update this trade. I just want to say kind of sitting tight, watching, waiting, and mainly waiting to see how we resolve this current trading area, not just a brief blip up to the upside or a brief blip to the downside. As I like to say, on the downside break, the redder the better. Get to T2, we got a good chance we're going to go to T3. And if we get near to T3, an even better chance we'll go to T4. That's how I see this one. And should we bounce, should things go the other way, well, maybe strategy wants to come and visit its 200-day moving averages again. I'm trying to get my light blue color tool here. These red and blue lines are the 200 days. It could be a potential bounce target there and still put you down where I think we're going. Much above that, something else is going on. Okay, let's move on. A lot of time spent there, but again, massive profit potential if it plays out. That's why I spent a lot of time on it. Back to the trade ideas. I went through the active trades short and the short setups match, meaning every one that's still a short setup is also an active, categorized as an active trade. There's a few due to the short, there's a little bit some shortcomings to the tagging system. SPY isn't really an official trade idea. I'll get to that at the end. I just happen to include the SPY chart with the last QQQ update because they're very much related, and therefore I tagged them the same on that QQQ update. So SPY appears here, so kind of ignore that. So, all right, let's move on. We canceled out. We covered Bitcoin, and we covered Bitcoin futures, and we covered strategy. So looks like we're a lot closer than it might appear. So the NASDAQ, all right, QQQ. All right, it's not much to say there, guys. I've been updating that on a near daily basis. This is the 60-minute chart where I've been focused, and we have our current typical swing targets. They're taking longer to play out than usual. We've been, again, in a multi-month, 2-month sideways trading range. That was the sell signal triggered when the trend line off the March 30th lows broke. We hit my first target quickly, so it was a successful trade. Hit the first target and never went really much past the entry, came back to the entry. Put in another divergent high right here. You got to zoom in tight to see it. Little divergent high. Okay, that was the closing bell. Put in a divergent high, sent it down. Recently we have some positive divergence. This was a divergent low right here. Let me grab it. Okay, yeah, this small divergent low. So that's it, guys. It's just we're ping-ponging back and forth. Looks like in a regular EKG. I've shared my thoughts many times over, and I can show it to you on the daily chart that I do still continue to maintain and prefer and believe these targets will most likely be hit. Like any trade, it's just one of many. It's not meaning you don't put all your money in any one single trade, even if it's a you think you're diversified if you buy the NASDAQ 100 because you're buying literally 100 stocks by buying one security, one ETF, but you're not. It's a very concentrated trade. The NASDAQ 100 is over 50% technology stocks. And of that, it's just the handful, the Mag 8 and the semis that are doing, it was just the Mag 8. And now lately it's been just the semis that carried it up while a lot of other things, even components of the NASDAQ were going down. But guys, keep it simple. A break of this trading range, a downside break, especially of my first target zone. I think this will do the trick. This 696-ish level, let's call it 695 support, will most likely open the door for a pretty good move down to T2 and then these additional targets. That's what my belief is. And as I've stated, any new high anytime soon, I believe has a very high rate of failing because it will be a divergent high, probably be overbought as well. And so my arrows have us go to the same place. I'm not giving you wishy-washy analysis. If we go up and we break out the new highs and we go 10 to 15% above the previous highs, then I'm just dead wrong, right? The trade should be stopped out. That's a wrong call. If we go up here, remember we shorted here. A marginal new high would be just a few percentage points, 1, 2, 3, 4, 5% or so above that high, and then a failure. And you can see it here on the daily. This is how it would look. I've gone over that. This was the sell signal on the break right here. the break of the trend line I just drew off the March 30th lows. That was the T1 level there on the daily chart. I'm sorry, 60-minute chart, my bad. And this yellow line shows what it would look like hypothetically. And this is why I say any new high anytime soon, because of how bad these indicators are lagging. This is the PPO, this is the RSI. Should we pop up, let's just say we have the next week is pretty strong, we go up and make a new high, whether it's here, 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 and then reverse, even just making the new high will be a divergent high. Now, divergence in itself is not a sell signal. I repeat, divergence, negative divergence is not a sell signal. Positive or bullish divergence is not a buy signal. They are conditions. So if you do make that new high, you'd want to see it fail. And you'd want to see that divergence confirm with a PPO making a bearish crossover below this previous point. So that, again, it's my alternative scenario. I don't even think we'll make it, but if we do, again, it's not going to change my intermediate term outlook. I'm still expecting this coincides at 636 level would be a back test of this multi-month trading range here. That's where we broke out, and also take us back to the 200. So that's the near term, intermediate term scenario. Again, with the price targets from that breakdown, I just wanted to kind of illustrate, looking, 6 steps ahead, playing chess instead of checkers, how things might look if we get there. All right, but for now, all we have is more of the same. That's the sideways grind. And if all you're doing is swing trading QQQ and listening to my voice, then you're probably frustrated. I mean, you made a few bucks initially, then you went back to break even, then you went profitable again, and now you're slightly profitable if that's all you did on the initial short there. So patience pays, guys. And again, spread your bets. I'm sending out these weekly updates. We're firing on a lot more cylinders than we're missing right now. In fact, I tried to look today to see if I could find any stopped out trades. I'm going to get a couple that hit a suggested stop, but then they also went on to then hit a next buy signal. Like I said, there's not many. It's a one or two, including that software ETF. Okay, back to the trade ideas. So that knocks off the NASDAQ 100, which knocks off the NASDAQ 100 futures, and QQQ, wherever you are. There you are. And just while I'm here, I'll update SPY for you and show you why on the tagging system. So when you click on SPY and you go down here under the active trades category, it was this update I gave you on the 22nd of June. I updated QQQ. We were right at the recent highs. Remember, this was our initial sell signal. And I told you this is what I do. And this is why I say each trade, a lot of swing trades are micromanaged with multiple entry points, multiple exit points. So we put in a new divergent high, had arrows going down here, and that's still what I maintain. With the next sell signal to come on a break between Wednesday's lows. And then in that one, I included the SPY chart as well, because I think that's important to see not just the NASDAQ 100 break support, but also see the S&P 500 break support. So that's why SPY's in there. And those are targets. Those are, arrow breaks denote likely reaction points at support levels. So if you are a SPY trader, ES, and if you do trade SPY or ES, or any other, some people trade the Dow. Every now and then I get chart requests for the Dow. By all means, I'll give you a chart. I don't trade the Dow much. So once in a while, I'll trade the S&P or futures instead of the NASDAQ, mainly when I think the financials are going to get hit hard, because that's they're the second largest component of the S&P 500, and there's virtually no exposure to the financials in the NASDAQ 100. So that's probably one of the biggest differences between the two. Okay, moving on. Takes care of that. RTY, which is the Russell 2000 small cap futures. I give you an update there. IWM's the same thing, as is $RUT, which is the Russell 2000 index. We'll just look at IWM. Covered it as recently as last week. We've had multiple targets here. We hit 1, 2, 3 to the button right there. We had positive divergence that low. We bounced, made a marginal new and still divergent high, but most recently, as I pointed out last week, zoom in nice and tight, little bearish rising wedge pattern. We broke down here, back tested it. Let me try to get the right color tool. breakdown, back test, moving lower. Need to take out this 228-ish support. I'm going to give you one more level here. They'll probably step in and buy unless there's a big type sell off with the Nasdaq or the S&P. These are all support levels, and again, I think longer term, especially when I look at the weekly chart, that's a mess. Let me see if I have a clean board draw it for you. That's that most recent uptrend line that just broke on the daily. But like everything else, there's just big divergence that's been building for a while on the weekly charts, even the monthly charts of most of the indexes. All right, back to the trades. AGO. All right, let's go to AGO. Some of these trades have been on for a while, and I don't know if the term is stale trades. I'm not in this one now. I've left it on because it hasn't hit either the suggested stop or any reasonable stop. I think we shorted that one back. Well, let's go see where we shorted it. It's been a while. AGO. There we go. Swing trade idea. February of last year. Yeah, so we shorted on the trend line there. I give you a total of 5 targets. This is where we shorted it right here. We quickly hit all 4 of my targets for let's go back to that. We hit T4 for let's see. What's the profit on T4? T4 was hit there. Okay, I posted the reentry, 20% profit. And then a reentry short here on a break to come on a break of this trend line right here, and or at that 89.92 resistance. So that was right here, I think. I believe that was the trend line. Either way, it's slogging around. This is a very toppy stock, like a lot. Many stocks are down in their own bear markets. Some are at or near highs. This is in a multi-year trading range. And so, again, it never shorting here. If targeting T5, a reasonable stop would have been somewhere up here, and that hasn't been hit. So all I can tell you now, if you're in it, let me know. I'm gonna whip through a lot of these that I haven't had any questions on, assuming nobody's in this one. But again, I left it there because it hasn't hit any reasonable stop. Sometimes I'll just close them out, pull them, move on to the next one. At this point, I'm not crazy about it. What I can tell you from a bigger perspective, this is a multi-year trading range, well defined by my T4, my 4th target right there. It was support. Remember, before we even got there, that's where I expected a reaction. Now the fact we had several reactions there makes it even more significant. And these reactions back here, that's what helped me identify T4 before. So now that's a big toppy trading range. Now we break to the upside, that's bullish. Break to the downside, we're going to hit T5 most likely. Weekly chart, you can see it's just been a dead money trade. So let's move on. So if you're in it or interested, let me know and I'll continue to provide updates. For now, I'll leave it on there. And if it just stays dead money for a while, I'll just clear it out to make room for some others. All right, let's go back to the trade ideas. Active trade short. By symbol APLD. Well, I just updated that one today for you, so we'll go look at the chart. I think this one has a good chance of hitting the final target. But this was T1. And that's where we closed today, right about on it. And so that's it. Shorted it there. I give you it first as a setup with a sell signal coming to break below this S1 level right here. And once it broke, it was a quick ride down for 22% profit, just about 2 weeks. And if we hit my second target, it's going to be about a 45% profit. Not much more to add on that. The trades. All right, next one, where are we at? Boat. All right, I gave you an update recently. Boat hit second target, bounced from there. I think I still have two more targets. That's it. We shorted that one here in the shipping stock video. I'll give you a suggested stop on that one because we had a precise entry point, and we've stayed well below that. We hit my second target, and then look at that. Kiss the 200-day exponential moving average, bounced, but we're still kind of back in this sloppy trading range. And these are still the targets. Now look, if you've already hit T2, you made, I don't know what it was. We can click on it. Again, the update was recent. We just hit that not too long ago. We had 10% profit, nothing big there. Lower stops to break even at this point would be a good idea. All right, short base symbol, boat, next CBOE. Okay, CBOE, that's a good example of, being a flexible trader. When I gave it to you, I give it to you as both a long, first a long, highlighted as bearish, but then we bounced it. Yeah, well, let's get to the chart. Again, this is kind of speaks to my, being a very flexible trader and also trading on different time frames. So CBOE and its partner in crime, CME, had both dropped down to key support levels. CME had just overshot. Highlighted that, told you I expected longer term that level to break and saw downside, gave you these downside targets. But I said, took it personally, went long first, gave you 2 targets. We hit my second target almost perfectly to 12% quick profit. It looks like less than 2 weeks. Got out, sidestepped the big give back, or again, at that point, you could have shorted it because I expected a breakdown ultimately of the trend line. And there's a reason for this update. So these are the long-term targets I gave you on the weekly chart. So T1, we reversed a little shy of, but we hit on the daily. You can see that uptrend line. So once we break this trend line in 217.34 support, we'll go down here. So longer term, that's where I think we're going. But the reason for this video, and among others, is this one's currently offering an objective short entry. That was the breakdown of the trend line, the purple trend line. You can see that it's a pretty key trend line. It's one that I expected after we gamed our bounce because, this I thought was a little overdone near term. So we bounced it. Then we took out the trend line, hit my 231.05 target right there, 231. Now we're back testing the trend line. So this is an objective short with a stop somewhat above. Somewhat, well, that's going to be relative to where you think it's going. This would be my next target. This one's already been hit. 231's been hit. I have an intersecting uptrend line and 214 level there. So that, for example, if you short here and you're targeting that, that's going to be a 23% drop. So give yourself no more than maybe a 12, 13% stop loss max. That'd be a 2-to-1 risk reward ratio, or keep it a little tighter. Give yourself a maybe a 3-to-1 RR, probably be better. In other words, you wouldn't want to see it if your whole reasoning for shorting is a back test of this trend line. Well, a solid move and especially a solid close back above it is going to negate that. So therefore, I think 9% or so stop. Again, if targeting that. I also have deeper targets on the weekly. Therefore, you could allow a wider stop if you're targeting those. All right. So that's why it's active. That's why it's in the short category, because we already hit it as a completed long. All right, trade ideas, back to the shorts. Symbol CCL, been on forever. I'm still in that one, just being patient with it. We shorted that. God, can't even remember. It's been for a while. We hit T1, we bounced. We hit T1 again. This is my first target zone. These are all my targets. I still maintain these. I even added a 6 and final target down here to be covered just above the 1115 support. Another toppy stock, in my opinion. And to keep it very simple, the next objective, the next sell signal, I really don't see an objective. If we go high, it will be a divergent high if it happens soon, but that's not in itself an objective short entry. I want to see this stock break T1. Remember, T1 zone was hit right here. I had the bottom of my T1 zone when I give it to you at 23.42. We hit a low that day of 23.47. Remember, always cover a little bit above the actual support level. That's what I'm showing you where I place my price targets, because traders like myself will often step in early. And then we hit a low of 23.45 there within 3 pennies. So yeah, that's the level that needs to go. I believe I already have a price alert. If not, set an alert and boom. Once that goes, Should be a quick ride down. And the fact that we've been consolidating, my guess is we'll have well, we'll still probably get a reaction, but probably a muted reaction. We've done a lot of consolidation in this trading range. So my thoughts are, my preference, we break down. I probably won't be interested in gaming a bounce off T2. I don't think it's worth it. We may get one. If we do, great. If it bounces back to up to T1, then that would be an objective short or add on. But I think we can maybe smash on through there with very little, if any, reaction, go on down to T3, maybe even T4 or 5. So that's CCL. CIFR, they gave that to you as a setup recently with a break to come below CIFR. Let's do that. The sell signal was to come on a break and solid break and or close, but below the up intersecting uptrend line right here, the uptrend line in that S1 zone. So that's it. And that's what happened right here. So there's your sell signal. We've also kicked. Now you can see what's happened. We've moved when I gave you the setup, the lines came in together. Now that was the sell signal because we broke the trend line, and you can see my first support zone. The bottom of the support zone is where we've been stick saving every day. These are candlestick bodies right there. Every single body is above there. So that means these were just intraday moves down below. So once we clearly take out that 1991 bottom of my S1 zone, it should be a quick swoon down. You do have the 200 days coming in, but this stock has a history of punching through them a little bit. So I still maintain these T1 and T2. Depending on what happens, I may make this an official target by removing the term potential. But if you're in it or looking to get in it, again, you just need to really clearly take out these recent lows, either intraday, all the better on a closing basis. The only problem with a closing basis can be it's a double-edged sword. Sometimes you wait for a closing basis. Stock like this could easily hit my target in a single day, and you watch it go down and down. So just keep an eye. If it takes these lows out, starts doing it on volume early in the day, that's probably good enough. Take your shot in or put a stop loss above the, keep a relatively tight stop, and it should be a quick ride down to T1, T2, and again, potentially all the way down to T3. And if so, that's going to be from the breakdown here. If T2's hit, it's going to give you a 40% profit. If that potential third target's hit, it's going to be about a 67% drop in the stock. It'll be chopped in 2/3 profit for you if you're a short seller. Or, sidestep and you give them back big profits if you're long that stock, but I still very much like it. All righty, back to the short trades, sort by symbol. CFR, Carvana. Carvana has been on an active trade for what seems like forever. We've also traded this one in the past quite a bit. Let me zoom in here. Sell signal triggered on trendline break right here. That was our sell signal right there. We quickly hit my first price target. We went back, kicked back, a lot like the similar stock market hasn't done it yet, or at least not the Qs, not even SPY. Made a equal or marginal, roughly doesn't matter whether you have equal or slight higher high, you had still lower highs and kept that negative divergence going. It was an extension of the previous divergence. So then you had a bigger drop. We hit my second target, third target, fourth target. Hitting pre or post market, I would have highlighted, I would have posted at the time. So that was probably, and this stock gives big gains. See, that's the thing about Carvana. She tends to move, it's like strategy or whatever. Fourth target was good for a 41% profit there. And it's still an active trade because I gave you a total of 5 targets. We hit T4. We had positive, aka bullish divergence. Let's see. I don't know if I haven't even visited that. Did I give you any notes that T4 was hit? I can't recall. It's been a while. February 18th. Yep. Yeah, just said consider booking partial portfolio, yeah, or lowering stops if you're holding out for T5. So that's it. Well, let's see. I may not even have recognized it. I recognized the divergence. No, we didn't have the divergence back then. Yeah, I drew it in after. came in, we hit it right there, and then yeah, then the divergence set up right after on that second low, second run down to it. Oh, that's it. Oh, so up to date, where we're at today, that was then, this is now kind of thing. Yeah, a little uptrend line here. You pretty much have a symmetrical triangle pattern right there. Let's draw it like that. So a solid and sustained breakout up to the upside would be hard to argue as anything but bullish. Although, really, until you take out that previous high, this stock is in a potential, downtrend here. But we need to take out my fourth target. That'll open the door to T5. Um, I'm not the only one that thinks this company runs a shell game with accounting shenanigans. So I may very well add additional targets, but that's going to most likely entail I want to see something in the financial system break, another credit event or something like that, or the stock markets. The major index, especially if the major index is SPY and QQQ, take out their 200 days, fall back below, then I'll most likely extend targets. To do that, I'll go to the weekly chart. The stock split. Unfortunately, this charting platform, and I reached out to them recently. They don't have a way. Their programmers can't figure out how to. It's a simple trick to fix the lines every time there's a split. I have to go and redo all the trend lines and everything. But my point being, when I look at this chart, big divergence here on the weekly time frame, and so I see much potential for much bigger drops than the targets that I have on the daily chart. We had divergence here back then at that time. Let me move that PPO histogram out of the way. And that was about a 90 something percent drop right there, 99% drop off that divergent high. So I could easily see something similar happening again. Okay, let's go back. We're almost there. Sort by symbol. Where are we at? We just covered Carvana, FedEx. FedEx is a mess. This is one because they did some quirky little spin-off that adjusted the price. When you look at the FedEx trade, let's see. Let's click on it. Again, if anybody's in it, let me know. I'm just going to kind of breeze over it. So I gave you a suggested stop over 394. We shorted this breakdown right here, and I gave you two targets. Go to the the stock. Let's see, 394 is up here. The stop was somewhere up here, but it's moved. They adjusted the price due to that spin-off. So I'm just going to leave it there at my target. So we're still, this was the short entry right here. We shorted right here on this breakdown. Let's use this other color tool right there. Popped up a little, still plenty of downside, especially just eyeballing it from a risk reward perspective. It wasn't like a 1-to-1 or 2-to-1 split or anything like that. So I'm just leaving it on. Bottom line, it needs to break this uptrend line right here and this 307.50-ish price support, and that should bring us back. The T1 level now comes in with the 200-day moving averages. T2 will mean that we broke the 200s if we lose it. All right, let's go back to the short trade ideas. IAI, I think this comes in with, I've looped it in with some other. We've had a short entry back triggered a while ago back in March, and we hit the first target, and then I included it in an update with APLD recently. So let me just go to IAI. It's the broker dealer index ETF. And so I think we shorted one of these trendline breaks. We hit my first target there, and we're back to entry. We still have, you can see we made a roughly equal and still very much divergent high right now. We had negative divergence at this high right here. We take that line across, it continues. And we also have its separate divergence here, but it's still part of the bigger divergence. And so I still maintain T5. That just the broker dealers aren't going to roll over to the stock market rolls over. So this one is very, not completely, but very much correlated with the broad market, the S&P 500 and NASDAQ 100, and the risk on stuff. If Bitcoin were to implode, probably going to take the market, a lot of stocks and even some financials down with it, and then the broker dealers. So as long as the stock market holds up near highs, you're probably going to see the same thing here. But I'm maintaining these targets because it meshes with my outlook for the market. And if the S&P 500 and NASDAQ 100 break down, the broker dealers are going to come down with it. Okay, next up is IGV. Yeah, and this is one of the ones went to. I was gonna gave a suggested stop, but I also gave multiple entries, and so you can see here, we had just closed it out, so we went long. I highlighted here in a video, was one of my top picks. I was very bullish. Like I said, if the market holds up, the S&P 500 had just recovered the 200-day moving averages. And so I said, as long as that they remain above it, this is probably your best bang for your buck. And so we went long right there. I gave you a final target. We had already gone long there and milked that 16% rally. I believe that's why I highlighted that. We can go back and check all these. I gave you a max target up here, which was hit, and that was good for whatever that was. I forget the percentage gain. Oh, there it is. Okay. Then I turned around. Where is it? Somewhere in here. Oh, 27% profit. Okay. Then we turned around here, and here's the new setup, and this is where it gets complicated. So it wasn't a hard entry point. It was max upside target had been hit on the long trade off the lows. We milked that. So let's turn around and reverse and go the other way. And it offers an objective short entry. Oh, there it is. This is the one. Sorry, my bad. That was the previous. I said it offered an objective short entry here up to this level with a stop roughly on a 5% or so daily close above it. So it was more of a scale-in zone with 3 entry points. Scale in from here up to, but not above, made clear. No, don't add above that level. However, or means, what does that mean? To scale in and then you take a short on a break of the uptrend. It was a very well-defined uptrend line. And then, so these are the targets I gave you. They're all marked here. So like I said, this one had a total of 3 entry points. And what did we do? We went up and I think that was about 6-7%. So just a hair outside of the suggested stop, which was again a roughly 5% above that level. That was our scaling zone there. But then it went on to trigger a sell signal to break of that trend line and has also lost the 200s, back tested and rejected. So I still maintain the targets. There they are, the ones I gave you. And so it depends. It's a stopped out trade. If you shorted, let's say, all there, and then decided to stop out on that move there, or maybe you re-entered here, and it went on actually, oh, it already hit T1. I should update that. Hit it there and effectively hit T2, close enough. I say always cover right above, somewhat above, don't try to milk out that last penny. It's not worth it. And that's still the third target I had it going down to. And the arrows, 81, 88.31, 88.54, and then 76.16. And those are those numbers right there. So again, so an active trade, I still think it's going to go there. It's not going to go down here and do this if QQQ doesn't go down. That's my thought. So highly correlated trade. Remember, IGV software. There's different subsectors of tech. QQQ is a tech-heavy index. You've got within there, you've got the big tech companies that do everything, the software, the Microsoft software, it's cloud storage, it's AI, and they got all that stuff together. You've got the semis as a subsector. But and it's funny because they've been marching to their own drumbeat. It was AI that killed the software stocks initially. Everybody thought they would be left for dead. And that's when I started getting interested and bullish on them right here at the lows, and we popped it and we gained a couple bounces off that level. And so this is swing trading. So I don't care fundamentally. By the time you start reading about it, it's all over the paper. Nobody over here was saying, or very few were saying, oh, the software stocks are going to get killed because of AI, their business model. But this is where the media, the headlines reach a crescendo. And that's when you want to buy, when everyone else is finally selling, especially when it's like, okay, well, where were you, back here telling us about all that? I'm talking about these brilliant analysts that come out at this point and tell you. And again, they might be right longer term. But the charts are going to be your guide, guys. Again, we had beautiful positive, aka bullish divergence, no different than we had big negative divergence at the highs there, and we were shorting plenty of the software stocks up there off the highs too individually. Okay, all right, that knocks off. We already covered the small caps. We already covered strategy. PEJ, that's what is that? The Leisure Entertainment and Leisure ETF. I still like it. It just keeps making marginal new highs. We shorted it right here initially. Reversed a little shy of my T1. This one's probably pushing the limits of a regular stop. I haven't updated forever. It kind of just fell off my radar. I'll be honest with you. These are still all targets, potential 1, 2, 3, 4, 5 final target here. It just keeps extending. These are all divergent highs, divergent high. We had a divergent low right there, and it's been bouncing off the 200s. So we recently broke down, had a sell signal. I'll revisit it later. I'm going to leave it on there for now. I still think it has a good chance of hitting those targets. Next one up in that list was, I'm just going to move along here a little faster. I have another window open on this big monitor you don't see. So with the list in order that I was showing you before, PFBC. This one is stopped out. I'm going to remove it. I'm going to use this video. I gave that one to you. We shorted it, I think here. We came very close, but reversed just shy, not close enough, in my opinion, to the first target. So I'm not going to consider that target hit. I'm going to consider this one stopped out for a loss of about 12-13%. And that's PBFC, Preferred Bank of Los Angeles. Now, if you happen to be in it and you want updates, let me know. Nothing's marginal new and still divergent high story of this market, right? Take this divergence line, just extend it. But at this point, you probably need to see it take out this uptrend line to trigger a sell signal. So it's not an objective, definitely not an objective short right now. There's a little minor trend line, breaks that, that'll be your first sell signal. So I'll go ahead and move that one out, and we'll consider that again. I think it was right there on that trend line break. Consider that one stopped out. QQQ I already covered. SMCI also been on forever and a day. Again, more of a long-term trade. Let's see, we shorted this one, geez, way back here. I think it was on the rally into that trend line. 1, 2, 3, 4, 5, 6 of 7 targets hit. Hit the 6 target zone there, had big positive divergence, rallied up, tried to take out this primary downtrend line recently and had a big failure right there. That's what we call failed breakout, whipsaw. And it's back down to my former 5th target. So it's come all full circle about where we entered it. And again, since it never hit T7, nor did it ever exceed any reasonable stop based on the final target from the entry point, it's still, I'll leave it on as an active trade. It's just been kind of whipping around lately. And I right now, I mean, I think it's going to go to T7. It's at support at this point in time. And it's going to go with with NVIDIA and with the big AI trade if that, and QQQ drops. Okay, I think we're, oh no, SOX. Let's go to SOX. SOX and XSD are on there, SOXX. I give you targets on the daily recently as well. This is kind of also an ongoing trade with multiple entries. If you're trading off the daily chart, these are the 4 targets. This was the recent breakdown right there. And I gave you T1 a couple weeks ago, one of the videos, I believe. And then we've hit that level right after that, right there on July 7th. And bounce back. We need to take that out. When we take out T1, we should head down there. 60-minute chart. I have much, my targets are down here. And it's a lot like the NASDAQ 100, just kind of grinding around sideways there. And I had XSD up on there, but that's just for coverage, really. It's another semi ETF. You can trade it. It's also in this sideways trading range right there. And oh, let's not forget on SOXX, I gave you an update last week on the weekly chart. Remember, I covered the history of the bearish PPO crossovers. Oh, I already put that away, didn't I? Yeah, PPO histogram. So you have the bearish crossover in the PPO histogram, which, as I've covered before, 9 times out of 10 or whatever, these bearish crossovers are associated with bear trends. And it doesn't look like a lot just because of the magnitude of the move on this chart, but they range. Many of those drops are about 50% or so. Then last but not least, I had XRT on here. Also been on for a while. That's the retail sector ETF. We shorted the break of that bearish rising wedge. I thought the first target zone was here. I might have modified it, moved it up there for you. I'm trying to remember. But what I pointed out recently, again, this is one that I've updated from time to time, this complex head and shoulders pattern in recent videos. So you have a purple neckline right here. You have upward sloping neckline. You can also go with and that's perfectly fine. These head and shoulder patterns can have a downward sloping neckline or upward or parallel trend line. In this case, I use the purple trend line for the measured target. They all come in together. What I'm talking about is either, roughly this price support here. Either way, you have the makings of this. There's a left shoulder head, right shoulder 1, right shoulder 2. Oops. But we need to go down here because if you go up much higher, you're going to equal the head and it's no longer head and shoulders. So bottom line, and on a head and shoulders pattern, you get a trigger when you break the neckline. So we need to reverse, and what you want to see and need to see, a lot of people don't scrub these things with volume. Off the formation of the head and the right shoulder, you want to see an uptick in volume, which we did in both cases there. So you'd want to see, and see it soon, a move down to keep the symmetry going for two relatively, they don't have to be perfectly symmetrical, but two relatively symmetrical right shoulders for that complex head and shoulders pattern. And you'd want to see a uptick in volume on the down move to the neckline. Then when the neckline breaks, there's a measured target, which comes in with that fourth target I gave you before, and I still maintain that fifth target there. So that's it, guys. It's an update of the official trades. Now I can tell you this. I have some of these, like I told you in the video, I'm not so excited about. They've just been on there. They haven't given me enough reason. They haven't stopped out or exceeded a reasonable stop. They're kind of moving around dead, waiting to hit the next target. But I am starting to build a list of new setups and things I like. And I'm going to continue to do that this week. So over the next couple days, I'll get some new setups, both long and short, out to you. And just remember, too, that the broad market's grinding sideways. So I'm having a hunt for trade ideas. It's not as easy as it normally is because we're in a directionless market. We are seeing that sector rotation that I've talked about. So if we can get in front of the right things, even if it's just for a few days or a few weeks, make 10, 15, 20% on something, move on to the next one. That's all you can do. Remember, you can't squeeze water out of a rock, blood from a stone. If and when, the market makes a big move in any direction, what I tend to do at that point, in other words, if we get my next sell signals on QQQ and the semis and or Bitcoin and strategy, then I tend to focus and push those trades pretty hard via futures and concentrate on the indexes. For example, on NQ, I'll watch the Mag 8, the big stocks that matter, the semis. I'll watch the S&P 500. And, any individual stock positions I'll leave in place with OCO orders, but I'll tend to not take on a lot of new positions because I get hyper-focused on the market when volatility spikes. And that goes hand in hand with the VIX. Remember, I'm not talking about, I wanted to stick with the current trade ideas, but the VIX, like I told you, the VIX will wake up and will not wake up until the financials break. And the VIX is setting up. I highlighted that last divergent low. All that's happened, we've made an equal, even slightly lower low, and the divergence is still there. And I can tell you, I think the financials are ready to go, including I have a lot of Canadian banks that I've been watching as well. I've covered those with you. And so this is going to be another trade idea again soon for you, the VIX. So I'll cover that in the next update, maybe tomorrow. Okay, let's wrap it up here. Long video. This has been Randy Finney with Right Side of the Chart. Have a great day.